personally, I didn't know everything about banks. I mean, I just go in, get my money, that's about it. Don't really deal with too much, don't write checks very often, so without a lot of that stuff, I don't know 100% how banks work, but banks really, they get their money through loans and mortgages, so basically, when you deposit money in the bank pays you interest on your money for keeping it in the bank, and then when other people take money out from the bank, as either a loan for like any type of payment or a mortgage on like the house especially, they pay interest back to the bank for the amount of time it takes them to pay back. But that's mostly how banks get their money. And then we just found this cool calculator just on Bankrate. It gives you pretty much everything about a loan that you would want. And you really fill in the amount, how long you're going to pay it off in, what the interest rate is. You can do like the start date. So it tells you what your monthly payment is. And then you can even add like extra payments on there. So if you added a certain amount per month or per year, or even just an extra one-time payment, it recalculates the amount of time it'll take you to like finish off your loan or mortgage. So it's just a really good tool you could use if you do get a loan, or if you're trying to figure out if you should go for a certain type of loan or what you're trying to look for. It's going to really tell you how long it'll take you to pay it off, what it's going to cost you each month. So this is a really good tool to have that you can just kind of show people like this is kind of the type of thing you're going to be doing if you do get a loan.
David, can you show us what on that one? Go back to that one. Can you change the numbers so they can see what happens?
So
say like a car loan. Just I don't know how much cars are.
So it's a good loan amount for a car.
25.
Yeah.
25,000.
25,000.
So when we do that, you want to say how many years?
17.
Percent. Now you calculate it, you change it depending on what it is. And you can even add on, So right, like, if you did all that, your payment's done August 1st, and even if you just added like $50 each month, you're already diminishing your payment by a couple months just from adding $50. So from August 2020 all the way down to July 2019, just by adding $50, and just from the game we just played, you talk to them about credit card debt and paying it off can be quicker. You pay less interest that way. It's the same with loans. The quicker you're able to pay it off, less interest you're gonna owe the bank, so less you're gonna end up paying in the long run. And we also have this YouTube quote that kind of talks about
what are interest rates? Presented by WallStreetSurvivor.com. Interest is a fee paid by someone who borrows money to the person he borrows it from, and an interest rate is the amount that borrower pays. Here's Ben. Ben just graduated from high school and was accepted into a top university. Sounds great, right? Only problem, the tuition is too much for him and his parents to bear. So, Ben and his folks head over to the bank to borrow money for school. Ben talks to the banker and gets a loan for $50,000 to pay for his education. But why would the bank do this? Ben's a nice guy and all, but what's their benefit in lending out the money? The answer is interest rates. In exchange for the $50,000 loan, the bank will charge Ben 5% interest each year until the loan is repaid. So each year, Ben will pay the bank $2,500 in interest. Interest is almost like paying rent on the money you're borrowing. Here's another scenario. Imagine Ben has saved up $10,000 that he keeps in a savings account at the bank. By keeping his cash there, he is actually lending his money to the bank. The bank can then use this money for investments or to lend to other people. Just like the bank charged Ben an interest rate for the money he borrowed for university, the bank pays Ben an interest rate in exchange for keeping his money with them. The longer Ben keeps the money in his savings account, the more interest he will earn. In fact, even his interest will gain interest. This is known as compound interest. For example, if interest rates are 5%, in year 1, Ben will earn $500 on his $10,000 principal. In year 2, Ben's account grows to $10,500 and he will earn $525 in interest. In the third year, Ben's account continues to grow exponentially to $11,025 and he will earn $551.25 in interest. As long as Ben keeps his money in the bank, his principal would continue growing exponentially thanks to compound interest. Most personal finance experts say the concept of compound interest is the most important thing in growing your retirement nest egg. For more on interest rates, retirement, and other personal finance topics, head over to wallstreetsurvivor.com.
It was just a little video you even show, kids. It's pretty kid friendly. It's something they can understand about banks. Just help them, kind of figure out about interest. So, banking even does other stuff, such as, they provide your debit and credit services, because, we all know we all use that stuff all the time. They deal with your checks and, money, cash, anything with deposits and withdrawals, so all that kind of stuff. This link's just simple how stuff works. It just, describes banks pretty easily, has a nice, image that just shows where banks get their money and where they give it, and how they keep the difference between what they pay out and what they gain. Just little simple stuff that they can show. And then this is something I found that I thought was actually really cool. It's a whole hands-on banking thing just on the internet. And it just goes through all kinds of things.
So you're here to take charge of your money, right? In this lesson,
there's even sections like the bank and you, and just teaches you.
Now that you've seen the role of banks, do you see why they're almost everywhere? Things just can't get done without them. But what about you? How do banks help you? First, banks keep your money safe. They set you up with accounts, like a savings account, for keeping your money safe and making it grow with interest. Banks also set up checking accounts, usually for adults over 18, so they can pay for, say, groceries or bills, using paper checks, not cash. We'll learn more about checks in Savings and Checking. Another way banks help you is by giving you a loan for expensive things, like cars. When people get loans from the bank, they're using everyone's money, so each borrower has a big responsibility to pay back the loan.
So, just with this kind of stuff, it's got everything on it, all kinds of just, using money and everything. So it's really kid-friendly, something you can even go through with your class for a week and just teach them about money services, banks, everything. So this is a really neat website that I found. Something I think, a kid would have fun with. You can come up with worksheets for them and stuff like that. And then this was just another YouTube clip, the first one was about banking in general. So John's going to talk about loans specifically.
So, we kind of went into loans. How many people here do loans? We're all familiar with loans, right? So people take loans or money out from banks to help pay for things that are more expensive that they can't pay for. And you're required to pay a certain amount of interest on your loan in a set period of time. The interest can be higher if it's more of a risky loan to give out, and it'll be lower if it's a less risky loan to give out. And banks look at many different things when they're going into loans. Some of the things banks look at are your credit history. The higher your credit history is, the better your chance of acquiring a loan. They can look to see if you're paying your payments on time. Look at your collateral, like all the assets you have. So if you were unable to pay the loan, they could get as much money back as possible from you. So they take your property, vehicles, anything like that. The cash flow, like how much money you have, what your job is. Are you self-employed? Are you working for another company? And look at your character too, what kind of person you are. Just seem like someone that's trustworthy, someone that's gonna keep working. That's another thing that they look at. And there's also some reasons that loans get denied. So if you have poor credit, it's a lot harder to get a loan. They'll see that you maybe have not made your payments on time, they're late, you just don't have the money. Self-employment's another one, because if you're self-employed and your business takes a hit, that's really the only money you have. Whereas if you work for another company and it takes a hit, if you still have your salary, you're still going to get that money. Debt, if you're already in debt, they're seeing that you're having troubles making payments anyhow, so getting another loan is probably going to add to that debt too. you have a lack of income, it's going to be harder to make the payment back on the interest rates.
All right, so now what we're going to do is we're going to move on to practices that banks participate in. So just kind of what banks do, some fees that they may charge, or online stuff that they do. So it's going to do a little activity just at your table, just brainstorm some ideas, just think about like what you've done in banking, what you know about your bank, and just come up with some ideas of some good practices your bank does, like things you like, and some other things you don't like, whether those are fees, services they provide, just anything and everything. Kind of think of a few examples just for a couple minutes. So we're going to see if that kind of matches up with our list of some of the stuff we found that are really good about banks and also really bad about banks. I guess we're going to just talk about that for a few minutes and we'll share.
Overdraft protection. So like, say you have like, there's like a check protect where you have that at ours. They also have stuff where you can like get refunds.
Online banking.
Oh, sometimes you can take like pictures of it.
Oh yeah, mobile banking.
Yeah. Online banking is a
I
big
like
thing.
online banking. Just doesn't work for me. That too. But then you have to like voice it out.
I'm Huntington Champions. My savings is in Huntington and then my check is in Fancy. My parents are there. Trade Center.
I do have things. I went to go get a check from the union because like I left my checkbook at home and I did a check and then $2,000. I mean, I needed it, so what was I gonna do,
The one thing I like for my high school is they offer like certain, and we have a couple of banks, but the one where they checking accounts, they have different like options as far as what kind of like checking and savings accounts rewards and stuff like that. Well, that's besides that. And there's somebody that writes a lot of checks, like a free box of checks a year, which I don't write a lot of checks, so it actually lasts me well. Hopefully I never pay for checks.
I like my point. I don't know. I use my debit card. Yeah. Really? Yeah.
How much have you spent?
Where do you like check them?
You get extra like if you do offers. How do you use it?
I don't know. You just do it online.
They should actually like send you something.
Oh yeah. You just. I mean, I'll go on the website, but like I'll tell you, like, there's like a points and like how many debit card purchases you use.
I use all the time.
Yeah. I mean, you can get like gift cards.
Have you done that before?
Yeah, I got like a $20 on Target.
I remember like around this time, like first time at our wedding. Oh my gosh! I think I got. We had like
Alright guys, go ahead and wrap it up. We're just going to talk about what you found. Alright, so anyone can raise their hand, just while your table talked about is what were some of the good things that banks do that you really like that you think your bank does a good job?
Well, we talked a lot about like different reward programs and stuff that like, especially with use of like debit cards or whatever, you acquire so many points, so then you can get discounts on stores. Like usually they have like a huge list to pick from. So
yeah, that's a good way to keep customer loyalty, keep customers there. Any other examples? Any other shows? So we'll just go and go through a few that we came up with. So the big one is online banking. Online banking is huge now. Almost everything is online. You can look up your checking account online. You can make your payments online. A lot of times you may not have to go to the actual bank for months on end. Everything's set up. So online services is one of the best things that banks do now. And just putting all that information out there for you to easily access and use and make payments. A lot of these other things are just, they have a lot of locations that are usually nearby or in your town. I mean, Huntington's all over the place here. ATMs. I mean, I go to Huntington, so I know, Huntington has an ATM right in the Union. PNC has an ATM in the Union. Huntington has a bank right off campus. So, I mean, there's a lot of places you can just go, and then a lot of banks have a 24-hour phone line, whether that's to like activate debit cards or just call them about any problems you have. They're usually pretty available to talk to. And there's also a lot of bad things banks do, which, I mean, a lot of that has to do with fees. So did you guys come up with any examples for that? About like anything your bank does that you don't like?
The only thing I can think of that I get charged a fee for is like overdraft.
Overdraft. So that's a big thing. There's a lot of debate on that. We'll talk about that. But between whether you should get charged overdraft or whether people just rather have their card get declined. So that's a big deal. Any other examples anyone came up with?
I mean, I know I was sent a check and it bounced, and the bank took a fee out of my bank account, even though it wasn't even like
Yeah, that's something we'll talk about too tomorrow.
I think conversely though, overdraft protection, because I have overdraft protection on my checking account, so I think that's good.
Alright, so some of the bads we found were the fees for having a checking account, and in my reading I found there's like a lot of people lose money on hidden fees. That like the average account go up to 30 hidden fees, some up to 50. So like for the average person, they're not gonna know a lot of these fees or why they're losing money. So bankers need to do a better job of like talking to their customer and like really explain it to them. This is an easy way to lose customers, and it really frustrates people when they're losing the money they earn. And they talk about the overdraft fees too. So they buy like a cup of coffee, it's $3. You only have like $2 on your account. A cup of coffee might turn into a $20 or $30 cup of coffee.
Yeah, and that's a big debate. Is a debate between whether people would rather, have that protection. Would you rather just end up, having your card get declined, getting a cup of coffee, which is going to save you like a few bucks. Oh well, you might be a little embarrassed. Or would you rather pay a $35 overdraft fee because you bought something that was a couple bucks over? There's been a debate about that. Also, some people don't know about those kind of rules with their bank, and like people think it should be their choice whether they want that protection or not. But that's been a real hot issue recently.
And also, like with the overprotection, if someone would get a hold of your account and they're spending under it, it could be hard to detect because you expect the bank to get a hold of you if you go over. So there is a lack of security as well. We're going to talk about a little bit more of that in a little bit, because if they get your debit or your credit to get your banking account, that could really drain your account fast. Then we talk about wait time with cashing checks and transferring funds. It can, that's another way checks can get bounced because you think it's been cashed and it hasn't been. So you write another check and you're out of money again.
Yeah, sometimes when you transfer funds between just different accounts or different banks, it can take days. It's just a simple electronic process. So it's one of those things that banks can easily do it right then and there, but sometimes they don't. And they can just be annoying, especially if you really need that money right then and there.
So security and fraud problems, it is common in banks as well. And I found that checks can commonly be handled up to 15 times from a transaction. So it just takes one wrong person to get a hold of the information. And, I found this website. It had the statistics over the last couple of years. The way the credit is reported, it's 4% is from credit cards and 35% is from people's bank accounts. The highest percent that's targeted was actually 18 to 24, so that's right in our age group. And then also, like, the average amount of money that's stolen a year from a person that's reported is like $4,900. So that's a lot of money that's getting taken away. The states that were the highest were Arizona, California, Florida, Texas, Nevada, and then the Dakotas, Iowa, Montana, Wyoming were the lowest. I couldn't find where Ohio was. I think that's fine at the top because that's a population. There are a lot of those locations.
I mean, banks in the recession, this is really, came out 2007, 2008 when the recession started. A lot of people have blamed banks, and banks are for sure at least partly to blame. I mean, a lot of people lay all the blame on banks. I think that's, the real case, but banks were definitely a part to blame in this a simple video like this or these kind of videos are really popular.
Our financial markets are in chaos. The credit markets are frozen. Banks are failing. Home foreclosures are on the rise, while home values continue to crash. For years, wages have been falling. Now unemployment is increasing. How did this happen? The conservative agenda.
Our fourth challenge is to prevent the federal government from burdening our economy with excessive regulations.
Over the last 8 years, conservatives chose to look the other way as Wall Street bankers and mortgage brokers recklessly gambled with our economy. Conservative lawmakers rewrote regulations and loosened financial protections, while banking tycoons and hedge fund managers got very, very rich. Conservatives embraced an ideology of free markets with little oversight and no accountability, ignoring basic safeguards. As the financial warning signs mounted, they denied there was a problem.
The fundamentals of our economy are strong.
The banking system is a safe and sound one.
The American people deserve better than a cynical conservative agenda that rewrites the rules for the rich and sticks the American people with the bill.
Obviously that video is, a lot of being one way, but banks were definitely to blame for the economy, especially, back in 2007 it really started. The biggest problem was just banks' risky strategies on loans and mortgages. They were granting loans and mortgages to almost anyone and everyone that came in, whether they had good credit or not, whether they knew they could count on them or not. And, over time this made the banks risky. They were able to get a lot of loans and mortgages. They were able to make a lot of interest. They were making a lot of money. As that kind of happened, it was like people won't stop paying back money. Investors, were losing money, and it started to become really a big problem once it went too far. We kind of talk about, eventually banks started to even run out of capital. They couldn't collect loans off people because people were not paying back the money. And when they did go to collect their money based on people's assets, they realized a lot of people didn't have any assets for the bank to get back their money. They would, people would take out $5,000 in loans, not pay it back for a couple months, they would take it back, and nothing they could get was worth it. So they were losing investors' money, and all of a sudden they didn't have any more money. They couldn't grant loans anymore. The bottom kind of fell through on the economy, and that was a big problem. The SEC really failed in their job, to regulate all of this, to make sure that banks were sticking to what they should be doing. The SEC is kind of, as it's on the video, they made protection a little more lax than it used to be. It turned into a really big issue when the economy fell through. The economy really followed suit with the banks. Once the banks ran into trouble, that's right when the economy had trouble as well. So there were a couple big government agencies that came out of this. This first one, the Consumer Financial Protection Bureau, was created in 2007 when the recession hit to try and kind of get the banking industry and the economy back on track. The biggest thing with this is it works to give people an understanding of the financial agreements that they commit to. As we said, with a lot of checking accounts with hidden fees, people will sign agreements, but they don't read through the entire agreement. They don't know what all the rules are, when the bank can foreclose on their mortgage or come to collect their loan if they don't pay it back. So this agency kind of helps people to look at their investments, their agreements, and kind of say, this is what it is, this is what you need to know about it. A lot of people don't really know what they're getting into, and banks would take advantage of that from people, to make a quick buck. This organization also, they are allowed to write some rules and some regulations, as well as they restrict unfair practices. So they're kind of out there for the consumer. They're trying to protect the consumer as best they can, limit unfair practices that banks can do and use. And this is just the website right here. Just kind of talks about what they're about. It's just different stuff. They have meetings in different places just to get people up to date. You need to look at regulations and guidance and other things on here and get help and all that other kind of stuff. And another big agency that deals with the banks is the OCC, Office of the Comptroller of the Currency, really the main currency regulation agency that the government has. They're really big on just chartering and regulating banks and inspecting these banks. So the OCC has the right to go into banks at any time and inspect the banks and make sure they're up to standards, they're following the rules that are set, they're following all the laws, they're making sure the bank's doing what they're supposed to be doing. They're able to deny or approve the bank's new charter. So if the bank's not doing their job, they can deny their charter, the bank's going to close, they can approve new charters, new banks, that kind of stuff. They can also create new regulations just like the CFPB can, so they can creating regulations for banks, get rid of old ones, that same kind of stuff. They have their basic website here as well. Just kind of tells you what they're all about. There's different things about that.
So with all that, how can banks stay competitive and get back in the good nature of people? We said you need to talk to customers, figure out like what they like about the bank, what they don't like what suggestions they have, like talk about the hidden fees or anything of that sort. And they should increase the use of technology. I think like the online banking and going forward, a lot of people use that. The more that's used, I think that can help cut back on fraud and identity theft. Even changing just the attitudes of employees, get them on board. Like their main job is to help the people out because the way they make money is off of our money. So they should make sure that they know that people are first. Without each other, they really can't work together. And data mining, use the customer data. They can figure out, their customers using debit more in certain places, or using credit. How many checks are they writing? Things like that, so they know where they need to put their workers and put increased research to improve those areas of the bank.
And just one more part on this is one big thing they can do is just with loans, make sure they're giving good loans to people who are going to pay it back. I mean, interest rates right now are down compared to what they used to be, which is good for us, maybe bad for the banks. They're not getting as much money, which means they're not going to make as much profit. So that's why banks got to be really smart in today's society at making good choices on who to give a loan to, who to sign a mortgage to. The bank has to make that money. So, they have enough money to pay their investors, they have enough money to pay their employees, they have enough money to make money. So they got to do that kind of stuff. Technology is a big deal. Keep customers happy, everything available. The banks just got to get back to just being smarter about who they give money to. They're not going to be able to go back to what they used to do because that really caused the economy to bottom out when they were just giving out money to anyone and everyone, weren't able to collect it back. They just got to kind of avoid those kind of problems in the future. So, the banking industry was at least partly to blame for the recession. If they follow these new practices, the economy is starting to come out of the recession now. Things are getting a lot better. Banks keep making good choices, making the right choices of where they used to be, things they need to do right. They'll be able to get back into the good graces as well. Things will be a lot easier. So, hopefully, banks are able to keep doing this, and the economy is able to stabilize out again and be good again. That's all we got.
So what do you think about banks? Do you trust them?
Kind of.
Depending on the bank? Well, who don't you trust? Give me an example.
Who we don't trust?
Yeah,
maybe
financial
like
institution.
Maybe like the CEO.
The CEO, okay.
I feel like if there was anyone that was going to be corrupt within the bank, it'd probably be them because they have the most to gain or lose.
Okay. And so they're making pretty good money being in charge of